Thank you for tuning into Around the Coin podcast. I really appreciate your support. If you do enjoy these conversations, please give a thumbs up wherever you're listening to, a heart, or share it with a friend. Today's guest is Zach Resnick, the founder and CEO of Unbounded Capital. Unbounded Capital is a micropayments-focused investment firm built by technical founders that understand how the entrepreneurial journey is. We discussed why micropayments is so important and what cryptocurrency and blockchain enable in the micropayment space. We discussed some of the downsides of traditional crypto investing, as we've seen recently. The last 6 months to a year have been brutal. And we discussed why it played out the way it did and what it might look like in the future with specific companies that we dove into, like Helium, and we talked about FTX, which is in the news, and what the collateral damage may look like, all with the obvious point that this is not investment advice. Hope you enjoy this conversation as much as I did. We touched on Bitcoin SB relative to Bitcoin, the tensions between governments and fiat currencies. I certainly learned a lot. I really appreciate a lot of the work that Zach has done, and I appreciate his contrarian perspective on things. Today's show is sponsored by Kickfurther. Kickfurther is the world's first online inventory financing platform that enables companies to access funds that they are unable to acquire through traditional sources. They connect brands and community together, in particular, people who are trying to purchase inventory and consignment, and they give brands the flexibility to pay that back as they receive cash from their sales. Learn more about Kickfurther, go to kickfurther.com and sign up to check it out. Here is Zach, CEO and co-founder of Unbounded Capital. All right, Zach, welcome to Around the Coin. I'm excited to be chatting with you, especially now, given that the world is particularly the crypto world is in a state of disarray. And I think a lot of people are trying to make sense of how the short-term events will play out. And maybe we'll start with a thesis around Unbounded Capital, which is a firm that you manage. Just give me the broad landscape of how you spend your time and what Unbounded is trying to do in the world.
Yeah, thanks for having me on, Mike, today. It's really pleasant to be here. Unbounded Capital is a micropayments infrastructure investment firm. So when I got my start in crypto and blockchain, both before the fund and when this fund started, we had relatively consensus views on the value of crypto and the value of blockchain. Then over time, that kind of radically changed to a point where we, for the last 3.5 years now, have been focusing on companies that are leveraging efficient and scalable blockchains to solve some of the world's biggest problems. And what we see as kind of the killer app for what blockchain can do today is micropayments. So we define micropayments as payments that are smaller than $1. And those payments today are not really economically feasible using the existing credit card rails, where you're charged 20 to 30 cents plus 2 to 3% transaction fee. Such that $1 is kind of the minimum you'd really charge someone online, given how much of your revenue is going to be eaten up in those transaction costs. And yeah, we're investing in some of the companies that make micropayments easier for other people and companies to do. And we see what today is the most efficient blockchain in the world as kind of the best technology to further those micropayments. So, we're a blockchain focused firm. We invest in technical founders that we think are some of the brightest minds in the blockchain world today. And what that looks like is primarily micropayments infrastructure. So we invest at early stage, generally seed stage, maybe a little bit at pre-seed, a little bit at Series A. And we like to lead rounds where, we feel like we kind of understand the business and the technicals better than almost anyone else and try to stay in that lane. And if that's not the case, it's not going to be an investment opportunity for us.
And do you look at micropayments as a competitor, in a sense, from an abstract perspective, to the tokenization? If a company is on the fence of whether to build their own token, to have incentives for tokens within their ecosystem, which has been quite prevalent, and then also used for speculation and has gone through a wild ride of price. And there's not many projects that seem to pan out, although I'm a believer that there are some. Do you view micropayments as being maybe an alternative structure for these sorts of new companies, or what does micropayments allow in the world that wasn't possible before, in your view?
Yeah, I don't view micropayments as really a competition to having a token within your own company. With very little exception, I view those as largely glorified Ponzi schemes. And even if you have all the best ethics and principles in mind, but you start your own token, there's going to be this really strong incentive to increase the token value in the short to medium term, rather than to build a great business and maximize the equity value long term. Right? Micropayments is just, a certain category of commerce that can be used by companies that have tokens, used with companies that don't. So I don't really see it as competition. It's maybe competition in the sense that some of the smartest minds in blockchain, to me, are sadly trying to build the best tokenomics and new token structures for a company where they could be using that talent and expertise towards building a great micropayments company. So there's the kind of competition on the talent, but in terms of actually, okay, here's a business, and then you're deciding whether to have micropayments or have a token. That's not really the case, at least from, I think, sophisticated entrepreneurs.
And from a technical standpoint, what's the breakthrough on micropayments? Certainly it seems like proof of work, proof of stake, and then it splinters on from there as to the different ways you can effectively scale micropayments. Like where are we today? What are the projects that seem to be the most promising?
So micropayments, there's nothing about that says, blockchains are inherently the best option. They just happen to be the best option today, and something we have high conviction will be for the foreseeable future. So if, for example, you were able to do micropayments at scale with something that wasn't blockchain, maybe there's a decent chance that we'd be looking at a lot of those technologies and actively investing in them. And we are looking at some of these non-blockchain technologies that could potentially have micropayments at scale, but we haven't found anything really compelling yet. So in terms of what enabled, blockchain to be uniquely qualified to deliver micropayments, it's about how blockchain can allow you to trust this data in the public sphere in a way that's greater than trusting any individual private database. But it's also not necessarily about saying this, okay, we can now trust this data because it's decentralized or because there's lots of miners or people that are running nodes. I don't think you're going to have success with micropayments by divorcing it from the existing, global economic structures of the world today. So blockchain could do is basically process transactions very, very quickly, efficiently, and cheaply relative to other solutions out there. So at my firm, the blockchain that we think has the most promise for micropayments is the original version of Bitcoin, or Bitcoin SV. And today, what you see is a roughly 1/10,000th of a penny median transaction fee for using the network. So if you want to, for me to send you something, that will cost, again, the network fee is about 1/10,000th of a penny. And then you can use a company like, say, Handcash, facilitate that. And then maybe in the future, they'll take a little spread on those transactions. But fundamentally, you're still looking at something that's probably under a cent, around a cent, very, very low amount of money. Where if you look at Visa, it's significantly more expensive. And then you look at throughput. So Visa today, MasterCard, these are some of the best examples of, centralized infrastructure to allow for processing of transactions. And what you've seen is never getting above 50,000 transactions per second. But on BSV, we've already seen 70,000 transactions per second. And one is, one of the best funded, most profitable companies in the world. So it's kind of like near the limits of what centralized technology can do, at least today. And then you have BSV, which is still, woefully underfunded, new in its development cycle. And I think a tiny, tiny fraction of its potential. So there's kind of two elements here, which is, the cost and the efficiency, but also what the future holds. If it was just 70,000 transactions per second, Visa's 50,000, and Visa's making better strides, then, well, it wouldn't really make sense to invest all of this time and money in these new companies. But from our perspective, we think there's a really strong chance that VSV or something like it will be able to do 1 million transactions per second within the coming years. And that's something that no other technology can offer. So blockchain is uniquely situated today to deliver on micropayments, and those can be used for absolutely anything.
Yeah. And do you feel that the ecosystem has moved from the original Bitcoin white paper, which states the intention as being digital cash, to now what people refer to as digital gold? And that refers to the difference in whether I spend my money, my digital money, my Bitcoin money immediately to buy items all the time, or whether it's like my vault in my safe in my closet that I'm just storing for, if the world goes to shit. And it seems like the vast majority of people at this point, maybe they don't question it, or they just don't have an answer to how we're going to solve the everyday transaction cash layer on the internet. And they just put Bitcoin as like Bitcoin's gold, is the gold competitor. What do you view that shift in the ecosystem towards gold, away from cash and Bitcoin, to something that was orchestrated? I mean, certainly it's within MasterCard, Visa, all the existing financial industry's incentive to have all the smartest minds in crypto be working on something that competes with gold and not with something that competes with cash and their settlement layer. Do you think that was an intentional, orchestrated, like funded thing, or that's just the way that people sort of played out?
I mean, I think it's hard to say. I think it's likely some combination of both, where this is naturally how things played out, but also there was definitely strong desire for anyone thinking at a Visa or MasterCard or existing kind of financial infrastructure to have it such that Bitcoin would not try to meaningfully compete, or blockchain would not try to, upend their existing business models. Or if they were, they'd want to kind of own it and understand it first before that happened. But, regardless of kind of how that developed, the reality is I think most people have got attached to the digital gold thesis, not because they thought that thesis on its own was the best thesis, but because that's kind of the version of Bitcoin that made them the most money. So I think when you look at like, why are people involved in crypto? Why are people investing in crypto? With, some exception, but not a ton. It's, wow, if I was early to Bitcoin or Ethereum, I would have had the highest returns in investing history. So some people did that. I know these, bozos that did that are now super rich. So now I want to do the thing that allows me to have those same types of returns. And it's that kind of FOMO and greed that I think has underlined a lot of the motivation behind getting into the industry. And I, am 100% guilty of that myself. And I think, there's a book that I really love called The Elephant in the Brain, which is basically all these extremely complex games we play with ourselves. So we think of ourselves as these like ethical, great civilized beings to basically justify, the same shit that monkeys and apes do and that we've been doing for generations. So, it's okay to kind of acknowledge this, and only when you acknowledge kind of your inner beast animal nature that I think it's possible to, tame it, rather than just denying that exists and you're a totally virtuous person. So most people that have been motivated by greed, including kind of me initially getting into crypto in 2016, we didn't think in our minds we were motivated by greed. We justified it by, actually, this has the potential to stop central banking and stop, fiat currency, which is like clearly, or, from my perspective, clearly like a terrible thing for the world and like responsible for, the theft and wealth transfer from the poor to the rich. So that's, why I felt it on some level, but I now, in reflecting, know that a big reason why I got into crypto was like, oh, wow. Like when I looked at it, there was just so much money to be made from arbitraging Bitcoin across different exchanges around the world, from doing other types of, trades and, and just from it plain out going up. So I think starting from there, being honest with yourself about kind of why people got into it, it makes everything make a lot more sense. So there's definitely been an ideologically motivated group of people, largely the BTC developers, kind of a few years post, Satoshi starting the network, that they got attracted to Bitcoin because for them, it was this opportunity to more easily launder money. And again, I say that without like a moral, being able to launder money or have money outside the system if you're, an activist in a repressive country, I think is a good thing. I think, it's also a really bad thing that, BTC has been used to launder, money from Iran and to, fuel fentanyl. And so there's pros and cons with these things such that, now my view has evolved where I think generally, we should try to make it a lot more difficult to launder money and to have money that exists outside the state. But yeah, there's this ideologically motivated group of people that were like, wow, Bitcoin's great, but if it keeps scaling like Satoshi outlined, well, now the nodes will basically be too big to run on your phone, Raspberry Pi, or like laptop, which means if the governments ever figure out how to seize assets on chain, well, now Bitcoin is screwed and we won't be able to legally resist because every single, miner or node operator will be too big to hide and kind of resist secretly. So that's kind of why there was this huge campaign to stop scaling Bitcoin and to have that, block size war that happened in 2017. And ultimately, without getting into all the details, the kind of anarchist BTC digital gold contingent was successful such that most people today view Bitcoin not as this technology and a network, but as this kind of anti-status money that is really volatile, and that to me is just a tiny, tiny fraction of what Bitcoin is capable of. And it's really sad for me to see all these smart people, all of this money go basically into buying more of these various digital assets rather than, trying to actually make people's lives better.
So interesting. I know about a year ago, you did an interview I listened to where you discussed the time horizon as being maybe 6 months, maybe a year, maybe 5 years, but some relatively short time horizon in which you were very confident that people would realize that Bitcoin SV had a stronger value proposition and the vast majority of people would shift their attention from Bitcoin to Bitcoin SV. What do you think let me ask you, do you still think that's the case? And then where are we today? Would you estimate relative ratio of smart people working on?
So I still think that's the case to some degree, but I think before I was way too narrow-minded and living in the crypto world for too long, where, the world is much bigger than the crypto world. Even as the crypto world has grown, it's still a tiny, tiny fraction of people. And now, my bet isn't really on all the BTC people, switching to building on BSV. It's just getting a tiny fraction of the rest of the world excited.
Yeah.
And that to me is more how I see more eyes, attention, and dollars in the BSV ecosystem than in the BTC. It's not kind of convincing people that have made all this money. So I wrote a short piece on kind of the religious nature of crypto. And here's an analogy so I think understand why it's so hard for people to change their minds in crypto, where take someone who's really religious, like a, Orthodox Jewish person. And now imagine solely because of their religious beliefs, they were able to 30x, 50x, 100x their net worth in a number of years. I mean, what's going to get them to change their mind except maybe losing all of their money? And that's basically the same case in crypto, which is you have these religious beliefs. Those religious beliefs worked out for you to some degree, depending on how early you are to a bunch of different things. And until there's a moment like now, let's say you were early to Solana, you're still probably net up some money, maybe unless you add it on at a much higher price. But only now are you really thinking, wow, here are actually the drawbacks to the network. When everyone was criticizing it for actually being really centralized, I didn't take those into account until now when I'm trying to unstake my Solana and I'm not allowed to, and the Solana Foundation just took over. So all these things that have been known the whole time, but it's only the hard thing of losing money is causing people to rethink things. So, in general, and I know you read my investor update on the FTX situation, long-term or even medium-term, I think this is a fantastic thing because it's causing people that speculated on these glorified Ponzi schemes to then be like, oh, wow, I could lose money doing this. And then that's a moment of reflection to then think about their future capital and time allocation. So, but to your specific question, it's hard to say when this will happen, but fundamentally I still think it's a really good bet to think that people will be more excited about using the most efficient or one of the most efficient blockchain networks in the world to actually solve big problems in the world to be integrated into businesses than to have this kind of anti-status money that can't scale.
Yeah. When you meet folks and they're telling you about the projects looking to raise money, is there any heuristic or series of questions that you use to determine whether somebody is deeply motivated by, the darker emotions, greed or, fame versus somebody who just is in it for the right reasons? Is there a mental model that you have for trying to figure that out?
A lot of it is just the filtering mechanism of what we're investing in. So because we're just extremely clear in that, we don't invest in companies that, start their own unregistered security token. And, we don't like companies that have a token that's separate from the equity because of the conflicts of interest. That basically takes away almost not everyone, but the vast majority of people that are doing something in blockchain for the wrong reasons. So I think that's an advantage where we're really clear in our thesis and what we like. It's just that we don't spend a lot of time looking through tons of deals. We broadcast what we do And if someone fits within that, we get to actually spend a decent amount of time with every deal that comes across our desk. But, within the thesis, of course, there's still people that are, maybe building it for the wrong reasons or not fully in the game. I think skin in the game is really important. So regardless of how much, assets, wealth someone has, and with entrepreneurs, most of the people, they're not wealthy in any respect for the businesses that they're coming to us for funding, looking at what that skin in the game looks like, where it's like, are they waiting to get started with venture funding, or have they been, working their ass off while having a normal job, to get this thing going? Or, have they been doing some other type of side hustle to fund these other costs that they can't do themselves to make sure that their dream comes true? So or then if you do have assets, like, okay, if you have a couple $1,000,000, how much of your own money did you put into the business so far? Or are you waiting for someone else's money before you put it in dollars? So skin of the game, I think, is really important to understand. Okay, is this person really, really in it? And then, also just understanding the story and if they're the right person for it. So you can be really in it, but if you're not one of the right people for this great idea, it's probably not going to work out well. So a lot of people look at, product market fit, but I also think that founder market or founder problem fit is important, which is, why is this person one of the best people to be tackling this problem? And someone that is in love with solving the problem rather than in love with their very specific product that, at the stage we're investing, fundamentally, no matter how much validation you get, is still largely unvalidated in terms of, is their product market fit?
Yeah.
So those are some of the things I think ultimately, that's a lot more of an art than a science in terms of feeling someone out.
Yeah.
And that just comes from a lot of experience. I'm lucky to have a partner that's been angel investing and, working in Silicon Valley for over 30 years now, and have learned a lot from him, and, really value what his judgment is on people. He's also just, I think, naturally gifted with an ability to read people in a way that, few others have. But yeah, finding someone who has had that experience is definitely something I would recommend, even if you're, not lucky enough to get them on your team or to help you advise on investment. Just to kind of spend time with people like that, I think would be really helpful for anyone that's listening, looking to get more into angel investing or venture investing.
And so you're making typical venture deals, equity and C Corps with Series A, B, C. Yeah. And
I mean, not Series A, B, C, seed stage, but,
just seed. Okay. Yeah.
Yeah. With the goal of these companies, depending on their situation, getting the A, B, and C rounds. Although I would just add that we don't think every company needs to raise, 5, 8, 10 rounds before having an IPO to be a great company. So there's definitely some businesses we funded where there's a chance we might be the last round that they do, because they just get the profitability and get to reinvest in the business with their own money rather than other people's money. And, sometimes we want to see a business grow faster than, and there's a degree of ambition where you can't do something without outside capital. But to have a really successful technology-based business, you don't always need at least tens of millions of dollars or more in venture funding. But I do think at the early stage, venture funding can often be very, very helpful. So just really allow you to kind of go full on out, hire a few more people, and properly iterate to get to product market fit.
And in that case, are you getting a return on an IPO? I mean, if a company doesn't raise through you have no secondary and follow-on rounds. Is the IPO or an acquisition the only two exit points?
I mean, we'll see if SPACs come back, but there's SPACs.
Yeah, sure. All right.
And there could be secondaries even if there's not additional funding rounds.
True.
But yeah, I think primarily, acquisitions, and not necessarily IPOs, but direct listings in general. We haven't had a company that's got to the IPO direct listing stage yet, but I don't think IPOs really make sense for most companies, paying bankers, 5, 6, 7% rather than just doing a listing yourself. It's rarely going to make sense. Although there's some examples where it could. But yeah, those are the main ways I think of us getting future liquidity. But that's a great problem to have in terms of what it's going to look like in the future. We haven't gone there yet. We've definitely had some lower acquisition offers that some of our companies have gotten, and we've advised them to not take those offers. Our business is trying to back, generational companies. And if we get, 1 or 2 in the portfolio per fund, we've done our jobs well. So yeah, really just doing everything we can to convince these folks to stay on the problem and do what they need to do to keep working on this for at least a decade.
Yeah. And when you were thinking through how to make sense of the crypto market a year ago, a couple of years ago, even 6 months ago, you were pretty openly contrarian. You were saying that the way that these exchanges run, maybe the lack of regulation in place. Like, what was your thesis then, if you look back on it, and how, if at all, has it changed today? Because you're one of the few people that looks correct given the last 4 or 5 months of activity.
Yeah, I mean, I think when I looked at all of these investors piling into these, exchanges, prime brokers, and miners, what I saw is, oh, everyone wants exposure to crypto, but no one wants to hold these crypto assets directly themselves, or, a much smaller percentage of people do. So if you're this institutional investor, this family office, and you want exposure to crypto, you say, okay, I want to do the infrastructure. Everyone loves the infrastructure plays. So then you had all these people that basically convinced people that, wow, regardless of what happens to, price of crypto, I'm an infrastructure play and I'm a great bet. Whether that's an exchange for the trading of all these cryptos, which again, for the most part are glorified Ponzi schemes from our perspective. You have miners, these public companies that are recklessly mining BTC, so levered where if the price goes down just a little bit, they get blown up, as we're seeing over the last few weeks. And then, various prime brokers like Genesis, which may or may not, continue. Today it's Monday, November 21st, and it's pretty heated news day in terms of Genesis and Digital Currency Group. So, a lot of these companies that, again, were raising at very premium valuations, just, even after a bit of a general market downturn, 4, 5, 6 months ago, are not looking very good right now. But they looked like some of the most attractive things because everyone had this systematic reason where I want exposure to this crypto idea, but I don't want the crypto itself. So then there's just this, companies that basically come to meet the demand of this investors wanting to invest in a bubble rather than, the actual, I think, legitimate capital needs of companies like this. And as a result, the valuations were really, really high. So a lot of the things that people are most excited about was not, let's invest early stage to the next great exchange, but, how can someone get me an allocation to Coinbase, to Kraken, to FTX? And that's why you've seen just insane equity valuations for all these companies. So based on the combination of the valuations and the fact that these companies are really just extremely levered bets in the price of crypto, because they can say, oh, we make money either way. Well, if BTC crashes to zero, you'll make a lot of money on the way down, and then your business will be done because there's not going to be more assets and more suckers after that. So it's not really a directionally neutral business. It's fundamentally a, crypto long business, such that with basically no exception, it would have just made a lot more sense, been a lot easier. You'd be able to get out if you wanted to just buy BTC, buy Ethereum, rather than, try to express that view by buying, supposedly an infrastructure company. So this kind of led me to just see these types of companies as, some of the worst risk rewards, not just in crypto, but in venture investing in general, such that you're betting on these tokens without having as much of the upside, without having the liquidity, and paying this like huge effective premium because everyone else is wanting to invest in the thing. So I'd say my view is still fundamentally similar, although they're a lot less of a bad bet today, but they're still bad bets, but the price has gone down a lot. So, something goes down 90%, it's 90%, less bad of an investment because you're getting in at that lower price, but there's still things I would, completely stay away from. That being said, if you're a takeover person, restructuring genius, then can you find a way to buy DCG, Grayscale, Genesis on the cheap and make some money from it? Sure. But in terms of, the business I'm in, which is invest in a company that has potential to be a, generationally important technology company, I'd still say that is something I'd really stay away from, because fundamentally, I do not think it is likely that, Ethereum and BTC will be around, or at least around at anywhere near current prices or other tokens like that, such that investing in the businesses that make money off people thinking that, I don't think is a good bet as a result. And I think probably many investors in a lot of these exchanges and miners and prime brokers might have said, if asked, I also don't agree that this is going to be around. They didn't kind of put two and two together and realize the fundamentally long crypto bet that they were making.
When you say you don't think that that they thought this would be around, when you say this, is that FTX specifically, centralized exchanges?
I think people trading BTC, Ethereum, trading crypto, so that they're making a bet on crypto being around, being traded, and therefore, the price not just being completely negative. Otherwise, there's not going to be enough bids to, generate a lot of, transaction fees.
Would it be fair to summarize it as, like, if I'm summarizing what just happened in the last 6 months to a year, is that people became so convicted, so confident that the fundamental use and disruption of the technology itself was going to become so massive, bigger than the internet, quote unquote, then of course the price would follow. And therefore, if we're so confident in that, clearly, like, look at these white papers, look at these smart people, look at all the project, and then you're validated by the price growth in the various tokens, then you just leverage as much as you can. And you say, well, let's just leverage what we can to buy the upside, because clearly it's going up. And then what happened was that there was just not a disproof in the usefulness of the technology, but of the pricing in the short term. So it just wasn't worth what people thought it was going to be worth in the short term. Is that fair to say, or how
how do you determine worth? So, it's not valued at the thing before, but I don't think the conclusion is that people thought it was worth what it was a year ago, and now people think it's worth what it is now. I think it's just less exuberance, because fundamentally these things have no fundamental value. The only way you're going to get fundamental value for a, crypto asset token is if there's significant demand for actually using the network. That's like table stakes for it. And today there's no blockchain network that has a ton of organic interest for demand of that network. There's none. I'm optimistic that Bitcoin SV or something like it, that will be true in the future. But if we're being honest with ourselves, there's no meaningful demand for any of these networks. So, buying into the token is one way of speculating on that demand increasing in the future. I used to do that. I, raised kind of the first smaller fund off that thesis. But now, from what I've learned, I think a much better way of expressing the view of there's going to be great demand for the network is investing in one of the best businesses that leverages the network to do something great, such that their customers don't need to have a token. They don't need to know about a token. They don't need to be on board to Web3. They just get to buy a product or service. And then blockchain is working in the background to make that possible.
Now, are you saying that there isn't a use, or maybe that the use is much less than previously anticipated of tokens in an ecosystem to incentivize people to do certain actions? Or
what's the best example that you can think of for how a token has made an ecosystem better?
One that gets thrown around a lot, and I've interviewed folks from there, is Helium. Which, just for people who aren't familiar, they provide a peer-to-peer internet mesh layer, and they incentivize people to offer these hardware devices and emit an internet Wi-Fi signal, and they create that incentive through their HIT token, HNT, their Helium token. And it seems like that's a good way to incentivize people to put these things in their windowsill, emit a local Wi-Fi. By comparison, if AT&T or Verizon were to try to launch the same level of network on the same granularity, it would just be much, much different, much, much harder.
So Mike, if you had to guess, what percentage of Helium's revenue today would you guess comes from, making money off people buying tokens versus making money off, customers actually using their mesh network?
Yeah, it's probably pretty sad. Yes, 100 to maybe 1,000 to 1, probably even higher.
Yeah. I think when I last looked at it a few months ago, from what was publicly available, it was about, a little over 99%, from effectively making money people off buying tokens. So again, the jury's still out. This is, I think this is a technology that's transformation like the internet, but it's blockchain at scale. Mm-hmm. It's not unscalable crypto tokens to subsidize and, jumpstart a network. Mm-hmm. We've had many years of that, and there's still not really one great example of it. I think the closest thing to it is, Richard Craib's Numerai. That to me is the best example. Would, you could link to that in the show notes and recommend looking into. But yeah, basically the best example people often talk about with Helium, I think is an objectively really poor example of, what people are excited about with a token incentivizing a network. Again, you're talking to someone who for years was like, my pitch point of raising the first fund was like, I'm going to understand tokenomics, or I understand tokenomics better than almost anyone. We're actively working with various companies that we've invested with, some that we haven't invested with, to help them better their tokenomics and improve a network. And, it took some time, but we realized actually this is kind of BS, and we're just justifying it to, internally so we can invest in these speculative tokens.
What
So I don't really,
like,
what?
what's when you say it's BS, are you saying the actual practicality or usefulness of the various ways you can construct the token is not there?
So most like in all these examples, when some company or ecosystem creates their own token, it almost always adds more friction to using the actual product or service than providing some type of value. And then the tokens that actually do add some type of value or incentivization is just an illegal security. So yes, like giving people and lots of people upside in your business is a really good strategy. There's compliant and non-compliant ways of doing that. And crypto has basically taken kind of, the extreme, not trying to be in compliance approach, or, very poorly trying to be. Like exchange tokens are a great example, whether it's, BNB or, the FTT of, hey, like you buy this token and you get some governance rights, but you also get reduced fees for trading volumes. And it's like, cool, that could make sense, but we have laws against that in basically every developed country in the world. So without speaking to the morality of those laws, and if we think they should be the case, they exist, and these governments have monopolies on violence and police and regulators. So even if you don't want them to exist, they do exist. So kind of just sticking up your middle finger and saying, well, it's decentralized and it's crypto, so that doesn't apply to us and we're just going to do it anyways. We've seen how that's played out with still what to me seems like very minimal enforcement relative to what's going to happen in the future, given how cut and dry basically all these crypto networks are in terms of fundamentally being, illegal securities. So I do think that there's value in incentivizing people through loyalty programs. I've, built a whole business kind of arbitraging, credit card miles and points, understanding loyalty programs. So I definitely think there's a lot of value to loyalty programs. It's the only way most airlines in the world are able to turn a profit today. But is it crypto like essential to that? And I think the answer is no.
And loyalty points are interesting because they're always closed market. You can't, right. You can't, they're specific to Zach or Mike. They're not something that you can trade, but they do have value. They have a set value, and that you can usually exchange for, airline miles or buy some products or Amazon gift cards or something. So there's a value for it. But the fact that tokens were open market, do you view that as like the fundamental flaw in the construction? Could there be a promising future if we make some modifications to the tokenomics?
I mean, that's just asking the wrong question. It's like, why, like, again, I think it's more coming from a place of like, we have skin in the game of these tokens working. How do we make them work rather than let's actually solve a real problem that people have? So like, yes, can you turn failed, crypto Ponzi scheme things into loyalty programs that are compliant and actually work for a company? Sure. For a small minority of these things, but then most people building these crypto networks, again, they're not in it for that company actually working long-term. They were in it for that token,
right?
Kind of pumping and them getting liquidity.
Right.
So again, I just think it's the wrong question where it's, blockchain can do a lot of really amazing things. Micropayments is what I'm most excited about today, but fundamentally there's a lot of things that more involve data than payments that I think blockchain is going to be known for over the next decade. But I think we have enough evidence to look back and say, okay, this whole, having a crypto token to incentivize some new Web3 network is just not working, and this is coming from someone who has been full-time and then some in the crypto and blockchain space since like 2016. So that I really wanted it to work, man.
Yeah. Yeah. Well, I really want to come to almost like a like philosophical ground, or at least a product-based ground as to why they're not working. And what I don't want to do is say, well, the price crashed because one guy at a company mismanaged it.
Let's look at actual just like examples where it's like, let's take, Ethereum, for example, all the various cases for Ethereum. Most people, I think, if they're honest, the reason why Ethereum will be more in the future to these people is the fact that it's a better money than BTC and a better money than anything else. So that thesis to me is quite flawed. And, you can maybe link in the show notes. My partner, Dave, wrote a piece called, what's the exact title, but basically how governments can seize BTC on chain.
Dave or Dan?
Dave.
Okay.
The same way that they seize bank accounts of various criminals. So right now, if you know that X bank account is actually controlled by, Chinese fentanyl dealing cartel, you can go to the bank, present, the warrant, the evidence, the court order, and then seize those funds. That same process can happen today with just very minimal software on any of the versions of Bitcoin, on Ethereum, on any of these different blockchains. It just hasn't happened yet. So we wrote a piece that basically outlines how that will happen for BTC. And then if that can happen, I think the value proposition of this being uncensorable money, uncensorable gold kind of goes away and will likely cause a death spiral in these various assets. So the main, I think, honest bull case for an Ethereum, for BTC, is this kind of anti-status money thing. But, putting that aside, and like, what are the best examples of tokens that are actually adding value to the network? I think they really are in, the categories I already spoke to, which is they're effectively kind of securities. And because they're operating outside of the law, they have all these features that those that are compliant don't have. But there's very little that's actually unique to, say, a cryptographic network or a blockchain, and more just unique to the fact that they're able to do whatever they think they're able to do whatever they want, because they're using a crypto asset and they're using a blockchain. But you can code in all of these different things into some type of loyalty program if you wanted to. So there's not, if you have other examples besides Helium, and I can kind of like go one by one and say, here's why I don't think a token adds value to that ecosystem. Most of these network tokens are, governance tokens, which give you the right to govern some type of network. And again, why that would be valuable or valuable anywhere near the prices it's at, even at these depressed prices relative to a year ago, is beyond me.
Right. I totally agree with you there. I think there seems to be like three primary drivers why someone would purchase the token. One is they're compelled to do, let's start with the simplest. They just view it as something that will go up. So it's an investment. Two is they actually want to make governance decisions they have a large, in their category one, they bought $100,000 worth of this token. Well, I want to participate in the voting mechanism. Typically, the way I see it is that a privately held LLC or C Corp is the development shop for the protocol. And when you speak to the founders, they're always like, I want to dissolve the LLC and I want the protocol to run itself. That's always the same story. And then there's a governance token, the token that people purchase, and they'll have votes, and then whatever the vote says is what the dev shop has to build. And like, you could see a lot of flaws in that because like, well, who enforces the governance of this? Like we all agree, we're going to do it as long as all developers in the LLC agree. Like push come to shove, it never really seemed like it had solid ground. Like you had a voting mechanism that was
what's the best
good.
example of on-chain governance you've ever seen? What's like the best case,
Best example of on-chain governance. I mean, they all look about the same. I mean, they just the ratio of whoever owns the tokens, and they have the voting mechanism, and then people vote.
I mean, specifically, is there a project that you can say had anything but just absolutely horrible, governance through some type of governance? So
it always seems like it's the same flaw. It's like, okay, here's the results of the poll, right? It's like, okay, 55% of people think we should do this. And then the dev shop's like, all right, guys, well, let's go do it. But if they didn't want to do it, it wouldn't happen. It's like it's like law. You know what they say about laws? Like laws, you don't need laws for people who follow them, and people who aren't going to listen to them don't listen to them anyways. So it's like, well, what's the point of them anyways? I kind of feel the same thing with this governance token. Is that they are a useful. They're like a poll, right? Of the people who bought the tokens, how many want to go this direction versus this direction, and then we're going to go that direction. But like, no one has put a poll out there that's like, let's shut down, like hypothetically, right? We're going to shut down the project and give everyone's money back. If 51% of people voted for that, would the founders and the dev shop that has root access over the would they actually do that? And who would enforce it if they didn't? I don't know. These things aren't software. They're
and basically every example of where pushes comes to shove, the founders that have control are able to exercise control. Right. I think there's a reason why basically all the great businesses in history have not been started by like these distributed protocols with crazy voting. It's by like a small group of people or one person in a leadership position that makes decisive decisions and takes action. That's how great companies and great things get built in the world. It's not by, these crazy hypothecated on-chain governance type things. So again, anyone I'd be happy to speak to, anyone that says an example, oh, here's how it's actually working, well, but again, it's been many years of this. We haven't seen anything good yet. And I think, it'd be one thing if there's like, okay, we haven't seen a lot of examples of this. X hasn't been tried, so we don't really know yet. But I think that's hard to honestly say where we are today in 2022. But a lot of people keep saying it kind of until this whole thing, I think, blows up. So
would you take the same attitude directionally towards layer one technology as a whole versus just the tokenomics side of it? Like all the things that Ethereum are doing and Solana, like maybe just take Ethereum, for example. They're the biggest, say, smart contract, crypto layer one. People can build applications on top of that. Many of them have.
Yeah.
Like, do you view that as an ecosystem that could really flourish in terms of the new technology that's capable because of the tools there?
So fundamentally, for something, an ecosystem like that to flourish, you need technology that scales. So Ethereum has basically never scaled in the history of it existing. And there's lots of reasons as to why. I think the two biggest reasons are proof of stake and account-based transactions. My firm and I have written many pieces on that. Specifically, our first book, entitled How a Scalable Blockchain Will Win, has an entire chapter on kind of the flaws of a proof of stake system and how that compares to proof of work. But, in short, when you have any type of account-based virtual machine system, it will never be able to compare to kind of a cash-like system like a Bitcoin, and will have all the same issues that our existing global financial infrastructure has in terms of being able to scale. So that's why so many people trying to start businesses on Ethereum and then have shifted over to Bitcoin SV, to Solana, to other things, when they're like, oh, well, this seemed great. There's a great developer community. There's this Ethereum Foundation. But if anyone ends up using my app, well, then the network might crash and the transaction fees are only getting higher and higher and higher. So for businesses where it doesn't matter if you have a 1 cent or $10 transaction fee, like degenerate, DeFi protocols, that's going to work on Ethereum. And that's what most of like the innovation happening in Ethereum looks like, is kind of in there, where it's, largely people with resources that are kind of creating around and playing this, what looks like to me largely a negative sum game. But yeah, I think I'm very bullish on, quote, like a layer one working. It just has to be the right layer one that actually works. So again, a lot of resources here, probably last one that I'll plug, but we have some scalability research on our website that looks at, I think it's like 15 or 16 now. We're trying to always add more, kind of what are viewed as like the top blockchains for smart contracts, and looking at the scale between these different chains and just looking, okay, what is the relationship between using this blockchain and the costs? And what we've seen is that for every public blockchain in the world today, besides Bitcoin SV, as the network usage has increased, the transaction costs have skyrocketed up. So it'd be one thing if there would be a lot of blockchains where the costs are staying similar and maybe another one's getting a lot cheaper, but no, they're pretty much all just going up like hundreds of times, thousands of times. In Ethereum's case, like literally like millions of times compared to when the network launched.
Why is that? Like, why is SB able to keep it so low?
Because of proof of work in using the UTXO or cash type model. So, with a cash system, if I give you, say, a $100 bill, there's just one thing that needs to happen for that $100 to be exchanged. I'm handing you a $100 bill. In an account-based system, I get debited. That transaction then has to be accounted for from Zach to Mike, and then Mike has to get credited. If those things happen in the wrong order, then the system breaks and needs to be manual reconciliation. So with, the Ethereum network, for example, there's no like, oh, we can go back and do manual reconciliation. So everything's just really, really slow. And the throughput that you can effectively get through the network is very low. So there's, new next generation proof of stake blockchains that are, using machine learning to kind of improve upon these things. And I think you'll be able to get, extreme, degrees of scale relative to an Ethereum, but relative to a system where I can hand you a $100 bill, someone else across the world can give a $100 bill somewhere else. And the order of which that goes on chain basically makes no difference. So you can process in parallel versus kind of stacking each transaction in the exact order, nothing's ever going to compete with a system that can do that. So there are a couple of examples of kind of like UTXO, proof of stake blockchains, Cardano being one, which is, obviously been a huge dumpster fire in terms of actual adoption and, transaction fees getting lower. But definitely far from set in stone that Bitcoin SV will be the one that kind of wins out on that game. It's just what seems to me today it has the best promise for it. And then the proof of work is the other part of that, which is you have miners incentivized to bring the cost down for the network. So with a proof of work system with no limit on scale, every transaction you put on chain, you get paid more money for. With BTC or Bitcoin Cash, you're capped. So, 1 megabyte, 32 megabyte limit per block. So as a miner, you're never going to invest more money and resources into the R&D of improving the network if you get tapped out from those improvements. Only with a network that has no limit on scale like Bitcoin SV, where you're going to see that R&D into improving the network. And that's why, since I've started investing primarily in the Bitcoin SV ecosystem, we've seen those transaction costs, go down significantly. Not like stay the same as the network grew in volume, but go down many, many, many times. And our bet is that strong capitalist, incentive structure is going to continue to drive the cost down. And that capitalist proof of work doesn't really, it has not been replicated in any type of proof of stake system, such that you have all of these individual node operators or miners that are actually investing lots of time and money into improving the network. So those are the main reasons. And then I would say, we've written a lot on as to why, but in short, just look at it empirically. There's only one today, and those are the attributes of the thing that's actually working and scaling. And then all the things that people are excited about is just objectively not working, not scaling. And the majority of those not only are just getting more expensive, they're also dysfunctional and they're down a lot of the time and have issues. Solana, Aptos, they all have their supposedly unique design.
Yeah.
But they have that proof of stake and that account-based thing in common, which from our perspective is just won't be able to be overcome. We could be wrong, but so far empirically, we have not been wrong on this, such that the majority of venture funding into blockchain ecosystems and, retail funding into crypto networks are going into things that from our perspective has basically no chance of working out long-term.
So like microtransactions are the biggest use case of blockchain technology, and Bitcoin SV is in the best situation to take advantage of that. And people have been focusing on other projects, probably for greed and wanting to make money on the tokens. And meanwhile, Bitcoin SV is sitting there like, hey, we're just crushing it on the economics of the protocol. And it's only a matter of time before people recognize that. And maybe what you said earlier, I think ties into this too, is maybe because of the price of Bitcoin and others have dropped so much that people lose that religious zest for the future is $1 million Bitcoin. Maybe that becomes like a fiction. And then because the religion is sucked out of the room, now we're like cognitively looking at, okay, what's the best rational decision? And that's when Bitcoin SV becomes gains more attention. Is that?
Yeah, I mean, I think that's largely true, except that I don't think the attention is going to come from BTC people that lose attention and interest in BTC. I think it's just going to come from
market
people outside of the crypto world. And that's what I'm seeing right now. And that's why, to me, some of the smartest technical minds of blockchain, they're building on Bitcoin SV. So that's what I look for, which is where are the smart developers? Where are the technical minds going today? And, Ethereum and, probably Solana has larger developer communities and people on those networks. But from our count, BSV is the third largest blockchain developer ecosystem in the world. So
how do you measure that? Is that by head count or?
There's a lot of different ways. We have a resource on our site that looks at all the different products, services, companies within the BSV ecosystem. So we're looking at it based on the number of actual companies in the world today. We also do have some numbers and data on who's attended various DevCons and things. But the metric that we care about most is not, how many people are building little dApps or building a new Web3 Ponzi scheme, but how many people are building actual real company with a legal structure. That to me is a lot more interesting. And I know to a lot of people, that's just a big philosophical difference, which is they think the value of crypto is in this kind of decentralized anti-statist world. And that's something that, I used to think and fundamentally do not anymore.
Do you see us now as heading towards, we don't know how the short term will play out with FTX or what the collateral damage will look like, but either way, it's going to be big and massively significant. Do you think this accelerates the tension between the U.S. federal government's monetary policy and just crypto as a whole? Like, do you see a high likelihood that the U.S. government clamps down, makes really draconian, overreaching regulations that effectively stifle any potential possible flourishing? Like, or do you, because in many ways there is like this anti-statist ethos and possibility technically compared to fiat currency. Is the government going to use this as a chance to clap down and say no more, like banning it and therefore stopping the war before it even starts? Is that how you could see this playing out?
I mean, we'll see. I don't think there's that much new regulation required to enforce, the existing laws and regulations that make the vast majority of what we see in crypto and Web3 today. I mean, it's already, from our perspective, illegal. So there doesn't need to be all these new laws. It's just about enforcement, and SEC has been very clear that they see the vast majority of crypto as unregistered, illegal security offerings. So just starting to prosecute an increased amount of those, I think will be big. Whether they'll come up with some new overreaching things to seize people BTC, I'm not really sure.
Yeah.
But like, will they use existing laws and regulations and technology to seize known, terrorist and drug dealer money? I think the answer is unequivocally yes. And we've written an article about how that could happen, and, think it is a good thing the sooner that happens, so that more money and time and attention goes to using blockchain for other things.
You think it is better that happens sooner, as opposed to people, because there is going to be a natural immunity to these sorts of Ponzi schemes and projects popping up again. Like, people don't get fooled twice by this kind of thing. I'm sure there's going to...
People get fooled 20 times in their whole life. I mean, we've seen crypto and these various Ponzi schemes for many years now. I've been in the space for like six solid years, and yeah, people are getting fooled by the same shit, whether it's crypto or, penny stocks. People like to bet on things where they can make a lot of money quickly. And I don't think it's fair to say that people will, learn from those lessons. A lot of people will not learn from those lessons, but it's the people that do that are kind of most exciting,
well,
to me and to our funds.
I mean it more like, so how does technology progress in a civilizational level? It can progress it has to, almost like any organism, it has to go into the unknown, see what's there. Maybe it gets bit, maybe it gets hurt, maybe it keeps growing, but you have to figure out, there has to be some feedback system. And the feedback system ideally is small enough so that you don't destroy the whole organism, right? And the whole industry doesn't collapse. But the feedback mechanism with Mt. Gox was like, hey, we need a different way to do this. There was a bright side, a positive side that came out of that collapse. And I view a positive, one of the things I see now circulating on Twitter is people want open proof of reserves on exchanges. And that if there was that pressure from enough people, you don't need 100% of people to learn, right? You just need enough pressure so that the exchanges have proof of reserves. If they had proof of reserves,
that to me is asking the wrong question. Like, we don't need more exchanges that are, chucking this, glorified Ponzi schemes and more people to say, hey, we actually have all of the FTT and all the Binance coin and all the Ethereum. Like, that to me that's not a big meaningful improvement. Like, yes, it'll be much harder for a fraud to perpetrate fraud, but fundamentally, like, if you're going to do an unethical fraud, like what Sam Bankman-Fried did, you'll find your way around a proof of reserve. You'll find your way around an audit. I don't see that as kind of like there being that much upside in that kind of changing things. To me, the upside is let's have less people buying into these crypto networks in general and spending less time there. That to me doesn't really seem like any meaningful improvement in terms of where time and money is being allocated.
Well, I guess like compared to the banking industry, you have a tremendous amount of regulatory pressure on the banks. Like, to start a bank is expensive, to run a bank is expensive purely from a regulatory perspective. You could make a clear case, and I like, banks don't have the capability to technologically flourish because of the high regulation. And that's a trade-off. It's like a safety versus growth. you can either, contain the industry, put a ton of regulation on it. Everyone's super safe, but you're going to stagnate potential growth opportunities in the future. That seems like the trade-off that's always implicitly made, right?
I think you're still presupposing that there's lots of value in this crypto world and people trading crypto assets on exchanges. And that's just not an assumption that I share. So if I were to share that, then yes, I think this would be big if I was betting on the future of lots of people trading different crypto assets for these Web3 networks. That's not a future I'm betting on that I think is likely or that I think is good.
Got it. Okay.
So I think there's definitely a lot of meaningful conversations you can have around, okay, what's the value of regulation and should the bank be less regulated and how are these regulations enforced? And that to me is like a very interesting type of conversation, but whether there should be, more Coinbases, less Coinbases, more FTXs, that's just not very interesting to me. It's just very clearly like, I hope that these things crash as soon as possible and that less people are spending time and money investing into these glorified Ponzi schemes. And that, it's in this, like this interview is an example of that, where it's like, I'm investing into me from what my perspective is, what some of the best shots of being these incredible technology micropayment companies. But I'm talking about kind of my bearish views for crypto most of the time, rather than these awesome companies. And that's, I think, evidenced by just like where there's interest today, which is like in crypto. And that to me is like the root of the problem, rather than in let's try to solve a problem and then whatever technology is the best tool in our toolkit gets used. It's no, the answer is this crypto that we already hold, or this crypto that I want to hold early before everyone else. And then how do we solve for making that thing valuable? And that's just the wrong question that I'm trying to, work to dispel.
My quick reaction to that is, I think there's a lot of disparaging, depressing realities in the world today, whether it's in politics or economics or political tensions across the world or local domestic issues in politics. And I think crypto offers the potential unknown for technology to uplift us, to provide something that is, gives people hope, that gives people excitement, and it gives people a way to either exit the existing infrastructure, systems, bureaucracies, start something new. And that freedom to do that is incredibly exciting to people. And so they may see opportunity where there is no opportunity, but I do think it's a human desire to want to go explore the unknown. And people recognize, or people look for clues as to where the opportunity is to build that new future. And I view it as, like, I don't have a firm stance on specific projects or even whether or not tokenomics, NFTs, all these things are the answer. But I am sympathetic to the idea that human beings will continue to flourish in new areas. And I think that the unexplored areas where it's on fringe, we don't know, is it good, is it bad, tokens, good, bad, NFTs, good, bad, we don't know, we're like making sense of it. It only takes one project to change an ecosystem for the worse or for the better. And I just think it's the area that is just, it's like intrinsically the most interesting. Not to say any of the other companies aren't doing awesome stuff that are non-crypto related. I think there's a ton of really exciting innovation happening there, but they tend to be siloed. They're not like an industry-wide thing. Like there's cool banking apps like Mercury and Novo, and I love those companies, but they're utilizing existing frameworks and things, and you can understand that. But there's like a frontier that's there in crypto that I think is interesting. No, I'm just going to leave that word interesting there. But does that, do you?
Yeah, that resonated with me a while ago. I'd say right now, like, it all kind of looks like largely the same stuff to me. And again, it's not very interesting. Like it's lots of different mousetraps for playing this negative sum kind of Ponzi game, and that's doesn't seem very interesting to me at this point. It seemed really interesting when I think I was more naive about why people are actually doing it, why I was doing it. And now that, it just doesn't. So yeah.
It seems like micropayments is an area where you find the most exciting.
Yeah, for sure. That by far in terms of what blockchains actually do today and what I think is going to catch on as kind of the killer blockchain app. 100% micropayments.
Okay. So of micropayments, what part of micropayments, like a sector, an area, a company, project?
So We like infrastructure companies at Unbounded. So our idea is like, we'll let other people bet on what's going to be the next Twitter, what's going to be the next best movie in the world. We want to bet on the companies that make those new types of innovations more easily possible to be built. So for example, there's a portfolio company of ours called Handcash, and they today is, from our very biased perspective, is the premier kind of micropayments enabling, SDK. So if you're a company and want to integrate some type of small payment into your game or application or company, you can easily use Handcash to get that started. And they actually just announced today, they'll be able to facilitate all of their micropayments in USDC starting in just about a month's time. So Handcash, can enable people to sell their content online with just kind of the swipe of a button rather than having to sign up for a subscription service, where it wouldn't necessarily make sense to sell an article. It doesn't make sense to sell an article for 20 cents because you'll lose that and more in using a credit card. But if you can just click a button and Handcash is paying these tiny little network fees and you just get to buy this thing, then wow, there's a whole new world of commerce and ways of consuming content that was not possible before these micropayments were possible at scale. So, whether it's consuming different types of content, playing a game and having various in-game items or purchases that are really small, the same way that the credit card allowed for all these new types of business models and forms of commerce that weren't possible, because while it might seem like, a lot of money now, before the credit card became ubiquitous, there was no way besides like sending a check to someone you kind of trust or a wire or ACH and doing all this verification to buy something that you weren't kind of there in person, where the credit card made it possible to really easily engage in commerce on the internet. So all these businesses that didn't make sense before the credit cards, like, oh, wow, now I can charge $10 and don't have to deal with wire fees and just all, those things. There's now all these new businesses. So the same way that it took the minimum viable transaction from probably hundreds of dollars to maybe $1, that all sorts of new businesses, as we make the minimum transaction from $1 to maybe 1/100th of a penny. And then maybe in 10 more years, it'll be 1/100,000th of a penny. And it's not necessarily like, oh, we're just paying for things that are now extremely, extremely cheap, but it's, having machines that are effectively buying and selling things on our behalf for extremely low amounts of money. It's being able to have someone that sells your data for you to various people to make a profit off it. There's all sorts of things that are possible. And, my investment thesis is invest in the companies that make it more easily possible for others, rather than bet on, what is going to be that exact best application. There's some companies in portfolio that maybe are arguably closer to the latter than the former, but we try to keep it some type of infrastructure play such that even if, this company is really just using micropayments for themselves, then they're creating some infrastructure for a new type of market, whether it's like in gaming or trading. So that's what I'm most excited about today. But as our thesis has changed significantly, as you have heard already, could definitely change again. But I think it's unlikely to change meaningfully, over the next decade or so.
And how much is Unbounded raised and deployed into how many companies?
So today we're currently raising our second fund, which is going to be a $50 to $70 million early stage venture fund. The first fund, we deployed around $4 million into, a variety of different companies, some that were before kind of switching to this micropayments thesis, some after. It was 9 after that thesis, and I believe it was 5 or 6 beforehand.
Interesting. That's awesome. If someone were convinced that everything you're saying is true and they're a retail investor, is the best way to lean into that via purchasing Bitcoin SV? Are any of these companies doing crowdfunding? Or any other creative ways that you think of?
Yeah. So some of these companies that I've invested in have done crowdfunding in the past. I don't believe any of them are currently doing any type of crowdfunding. Again, Bitcoin SV is one avenue to have exposure to it, but it's very different than owning various company exposure. Unfortunately, there's not one easy, great product that I could recommend. And again, with all the standard financial disclaimers, I'm not a financial advisor. Don't pretend to play one. None of this is advice. But yeah, there's, from my perspective, there's not a good product out there for retail investors to have exposure to it. Really, we're basically the only game in town in terms of exposure to early stage startups. And that's just kind of the nature of the startup world today, which is if you want exposure to a lot of the best companies, you have to kind of pay this like relatively high fee, illiquid venture fund. I hope that some of the companies we invest in change that and are part of bringing more liquidity to private markets and earlier stage companies. But for now, that's not the world that we live in. And I would say for retail folks that want to really get involved, learning more about some of these companies, we have every company in our portfolio on our site, and also a list of kind of all projects that are happening in Bitcoin SV, such that, maybe rather than getting involved with money right now, it's getting involved with time and educating yourself, or even, building a business using hand cash, or, getting involved that way. So I know that's a much larger step than just say going and buying something, but we're still quite early in the days of micropayments. So that's what I would recommend.
And do you see Unbounded Capital maybe in the next year or two launching your own token? Something that, yeah, kidding. Yeah. I hope not. Would you ever do like a angel list, or have a more something that people could?
I would. Yeah, it's just a matter of the amount of time and effort it would take to do that relative to the capital constraints us. Where the types of people and institutions we're speaking with, one check is likely going to be a lot more than what would come from that. It just hasn't made sense for us right now, even though we really want to do it. But after we raise the second fund and are, better capitalized and, go on for another few more years, I do hope that we can do that for our third fund, in the future, because I am passionate about making it easier for more people to have exposure to incredible technology investments. And despite me not thinking it's a good strategy to avoid regulations, I also do think a lot of regulations, especially in the US, like we have around kind of accredited investor offerings, are terrible.
Agreed.
And, hoping that there's some evolution there, or that, there's ways to work within those laws to just make it easier for ordinary folks to have exposure to incredible technology.
Yeah. Ironically enough, I think those laws originated from the same motivation, which is to protect your average investor from investing all their money away into some Ponzi scheme stock.
Well, yeah, I think those are bad ideas. I don't, I don't feel like there should be laws against people making these really dumb decisions, but I do understand the desire to protect those people, but whether protecting them via laws around doing so, we'll see. And, but I do think if you wanted to have a good argument for why these laws are necessary, crypto assets, FTX, you can't really think of a better example than that.
Yeah, for sure. Zach, are you writing publicly? You mentioned the blog, you wrote a book. Do you want to just throw out some of those details?
Yeah. So I think just link, if you just link to all the things I mentioned so far, that's already enough homework for people. Basically at unboundedcapital.com, you could find all of our different resources. We have the scalability research that I mentioned. We have 2 books, one that's kind of longer that compares our views to the consensus views on crypto. So each chapter is kind of, here's what the crypto consensus thinks. Here's what Unbounded thinks. We have a book on kind of the environmental nature of Bitcoin and blockchain called Green Bitcoin, all sorts of other research posts, blog posts. We do investor webinars regularly. So, you could contact me at zach@unboundedcapital.com. Don't put that in the show notes so I don't get off the box. But if you want to, if you're an investor and want to join one of our investor webinars, please shoot me a note. And,
let me ask you this.
I'd say
one more question too.
Yeah.
Who do you, either a book, a blog, a person that you avidly follow and have a lot of respect for, or have learned a lot from?
So many people, but I'd say Ed Thorp is who I want to mention right now. So there's a book of his, kind of an autobiography called A Man of All, or A Man for All Markets. So Ed Thorp is the person who invented statistical arbitrage or bond arbitrage. He invented blackjack card counting. He, made significant money off beating roulette by finding tables that had deficiencies in them, exploit them. And, until unfortunately his partner, that he had no knowledge of doing this, I legitimately believe, got involved in kind of some insider trading stuff. He ran a hedge fund with the highest Sharpe ratio, which is kind of like not just your returns, but, the risk you're taking for those returns, for about 20 years before winding that down and just running his own family office. But one of the most remarkable kind of mathematical minds, investors, people about risk, and geniuses about risk that I've ever, come across, and has really inspired me. And the big takeaway from everything he does is if you can't clearly define why you have an edge in doing something, probably best not to do it, whether it's with money or with time. And when you can find something where you can really define why you have an edge in doing that more than almost anyone else, that's something to double and triple down on. So Ed Thorp, highly recommend learning more about him and his wonderful
Yeah,
list.
I like that. I like that piece of advice a lot. It's so simple, but so easy to forget. Zach, thanks so much, man. I really enjoy this and keep crushing it.
Okay. Thanks for having me on, Mike.